Hey, buddy.
Hey Howard, what's up?
Koyfin After Dark. So we got a lot of congrats on the new launch. I wanted to walk everybody through this from the eyes of the creator at Koyfin, and there's a lot of big changes.
Yeah.
So let's tour people through some of these new features and how the product works.
Yeah, so we released a big upgrade last week or 2 weeks ago. It's something we've been working on for several months. It's basically rebuilding all our charting from scratch to really make it more useful, to make it a little more intuitive. And we've gotten a lot of positive feedback. So wanted to walk you and your followers through that as well as some other little changes. So
Right.
let's do that. So I will share my screen.
And by screen, we're going to be the guinea pigs are going to be my current portfolio. People are going to see all my positions across my many accounts, but not position size. They're just going to see the actual stocks. This is what I share with my community.
So can you see my screen now?
I can.
Yep. All right, cool. So same kind of layout as before, obviously. What you'll notice here is that under the stock here, so once you select Apple, we've condensed a lot of the functionality. So a couple of minor changes where we made improvements is uh, on this estimates page, we've made this a lot more clear on how to look at this. So here you have the price target for Apple now. You have kind of like how many strong buys, hold, sell, and strong sell. So this is kind of what
Mm-hmm.
analysts are saying. This is the
Mm-hmm.
estimates matrix in terms of EPS revenue or EBITDA for the next 12 quarters. And this is
Mm-hmm.
how these estimates are changing over time. So on a
Data
six,
from Cap IQ. Sorry.
this is sourced from Cap IQ exactly. So if
Okay.
we look at kind of like a revenue example, this is going to be, you can see that revenue for Apple over the next quarters is increasing over the past 3 and 6 months. The estimates are increasing, which is a good sign. So, good way to check your stuff. And then the really, really big change we have is in is in the graphing functionality. So before we had about 8 different ways to graph something. We
Mm-hmm.
condensed that into three big ones. So kind of this is the main G function, the intraday price, and the performance price. And everything from before we put into this G function where all the indicators now you can just graph in the
So
plain
if you
old.
type in Apple G, this is what you would get.
This is what you would get exactly. And the big difference is before in G you could only graph price and like RSI and MACD. Now you can
Mm-hmm.
graph anything for Apple. So here, because this is my default, what we've done is we've allowed you to create these templates. So once you graph anything, you can save it as a template and then graph it for other instruments. So these are some templates that we've built for you. So here, revenue, net income, and margins.
And when
And
people log in, this is what they'll see, right?
this is what they'll see. They'll see these templates over here, and then they can create a new template. So
Got it.
you can mix and match here. So here we have, bless you. So we have price and volume, some technicals templates here. Correlation beta is also here, which is kind of interesting. Another one that I like to look at, which isn't here, is to add, like, let's say we want to add volatility.
Mm-hmm.
So I add 3 month volatility here.
And what would this help you understand?
So this would help you understand, is Apple becoming, so let's just look at this on a 5 year basis. So volatility is mean reverting, meaning that it tends to kind of like revert to the average. So
Mm-hmm.
when volatility is very high,
Or it was just crazy ball.
right? December was crazy vol. So
Correct.
this is a measure of risk premium. So when volatility spikes, you know that it's likely to mean revert, and if you buy the stock, you're going to get paid for.
Risky. I mean, I was, selling premium there was risky, but it turned out to be a good trade.
That's exactly right.
Mm-hmm.
So so the
That'd be
so
really good on the SPY. Can I see what that looks like on the SPY?
Yeah, so we're gonna have so correlation. So here we have the instrument that we're gonna have the instrument versus SPY. So it's gonna be SPY versus SPY, then the beta versus SPY, then the volatility. So let's try QQQ. Why don't we do that? Is that okay?
Yeah.
Yeah, QQQ.
So in December, what was that? I'd just like to look back. markets were crashing. What did it look like? Apple must have been much more volatile than the QQQ at that point.
Yeah, so if you want to actually compare Apple versus QQQ, so this is just QQQ with this template, but let's compare Apple volatility versus QQQ, right? So we would do Apple. My computer is being really slow. So Apple G. We would go to this unsaved template, which means that there's kind of like, this is our kind of like our playground where we could do whatever we want and save it as a template. So this is our temporary template. So here I would do volatility. Right,
And then QQ.
3 month, exactly. So that's there. And then I can actually just type, when I add QQQ, I'm just going to add the same series. So these are, let me just change Apple to a line chart and then to blue, and then QQQ will be candle. So you can see here, then these will be like, now you could compare these on the same graph.
Okay, so they kind of were moving in conjunction.
They were moving in conjunction, but you could see, like, if you do the spread, if you look at the spread, Apple sort of blew out more than the QQQ. So that premium, like these were closer, and then these were further. So that spread or that premium actually increased, and now it's back down. So Apple's 3 month vol is about 26, and QQQ is about 19.
Got it. And okay, so this is just really powerful. Yeah. And what do you think people wanted the most? What did people want the most?
So here you can change the size of these things of this template. This is an unsaved template, but I could save this now as my vol template, right? So I could save this now as volatility and shortcut vol.
Oh, now you can shortcut that.
Now you can shortcut that, right? So if I do, what's a stock you're following? You're following like Lululemon, right? And I do vol. This is my template, gvol. And it's just going to pull up that volatility again versus the QQQ, because that's kind of like my secondary permanent indicator. So the first stock is going to change based on what I select, like Lululemon or Facebook shortcut, and then the second indicator is going to remain the same.
You're comparing it against the smoothed index, which matters.
Right.
Yeah.
Right.
Okay.
So in here we have just a lot more indicators that we also added. We have, like, if you wanted to add a look at all the different series we have your volume, we have price change, both historical and forward. So at any point in time, how did the stock do on a forward basis, which is kind of interesting. We have a lot more technical indicators. So Bollinger Bands, drawdown from peak. You can see how much the stock has declined from its 52. From its
drawdown from peak is something that I always like to see.
Yeah, so you can add. Let's add that, so you could see kind of like what the drawdown is. We have all the margins and ratios we had before in terms of the fundamentals, all the valuation stuff we had before, all the fundamentals for any company we had before. This is interesting. This is something new. We have growth rates now for all these fundamentals. So you could actually graph the 1 year growth rate or the 3 year growth rate or the 5 year growth rate for any of these metrics. So cash flow or net income or whatever it is. Positioning, short interest, and hedge fund ownership. And before,
what's interesting here is, like, a VC or me want to create a standard. Can I make like a standard, chart that I think people would like to see from my portfolio and make that shareable, or no?
So what you would do is you would basically choose. And so let me just finish up here with the analyst. So these are now analyst estimates. So this is EPS, next 12 months estimates, which is interesting, or revenue or EBITDA, or the price target that people have, you could put on the chart, or the number of analysts rating it a certain way. But once you create a template, like let's say, I'm just going to get rid of this. And let's say this is the template you want, like you like looking at the price of something versus its volatility versus the tech volatility and its drawdown from peak. You could then save this or save this as a template. So I would save this as let's say Howard's temp. Howard's temp. And so now this is a template that I could use for any stock, right? So if I Let's say I wanted to look at Facebook. I would just do Facebook.
Now, can I share that template?
So you can share the template, but the way you would do it is you would share this graph. So you would share this graph right here. You would do save and share.
Mm-hmm.
You would create a share link over here. So I'm just
Mm-hmm.
have this load. And once you send that link to someone, they're going to open up this graph and then they could save that template as their own.
Okay. Very interesting.
Right. And by the way, we gave people now more ability to kind of like, if you have a graph, you can now put a title on this chart. So
Yeah. I personalize mine a lot better. Yeah.
right. And then this way you just have a lot more flexibility on how it looks.
So charts was the big upgrade. Charting.
Charting was the big upgrade. Yeah.
And what's amazing is you've managed to keep this free just because of the way you've structured the company and the team being overseas, but this freemium model. And are you happy with the way the freemium's going so far?
I love it. I think it's given us a lot of great exposure. I think it's really kind of differentiated us versus other competitors that are starting out with $500 a month or $1,000 a month or $2,000 a month. Yeah, we want to give people an accessible product and then really charge the power users for if they're customizing it, or if they're integrating it with their brokerage account or their internal data. That's the stuff that we're going to charge for. But the basic tools we're not really going to charge for.
So the big play here is down around portfolio analytics and stuff.
That's right. That's right.
And so international next. What else can you show me from the product that you think you've changed that people will appreciate?
So what's cool about this is once you create your template, and let me this is probably not the great, but we have some really cool those price target templates, pretty cool, showing you how a stock looks versus the consensus analyst price target, and then below shows you kind of the difference. So this is a good way, like if we look at let's say Tesla's interesting, right? So kind of here this big run.
And what do you think is an interesting pattern to look for on these?
I think with all this stuff, it's really extremes. So I think with Tesla, whenever the price, it looks like here, whenever the price gets 40% below the target, that seemed to be like a bigger opportunity historically than where it is today. So I would look for that sort of stuff, and kind of same thing on the downside. You see kind of 20 to 25% above the price target was somewhere that it maxed out. So I think these ranges could be interesting to trade when they get to extremes. Another cool thing is to look at the EPS estimates. So this is what analysts on Wall Street are projecting EPS to be over the next 12 months. Tesla's not that interesting because it doesn't have earnings. Actually, let's look at Micron, because this is something that you and I have talked about before.
Micron, a memory company.
Memory company, right? Super cyclical. So what's interesting here is the price moves before the estimates start coming up and down. So if you look at kind of this cycle, when estimates were going down, the stock started kind of wavering here. Here, the stock bottomed and started going up before estimates started going up. Here, the stock topped before estimates. So the stock is always kind of moving before the estimates, because the stocks are forward-looking and they're incorporating a probability rather than the estimates, which are absolute. You can see here the stock topped over here way before the estimates as well. And this is a really interesting, we're in an interesting position right now because the stock has been moving.
Really plummeted, huh?
The estimates have really plummeted, right? So if you look at it on a kind of all the data we have, this is you can see here this is the estimates on this side. Micron used to kind of earn between $0 and $3, and the last cycle it earned $12, which is nuts. And that's plummeted to $2. So whenever when people were saying last summer, oh, Micron's cheap, it was cheap because the stock was anticipating that these estimates were going to collapse, which they did.
Yeah.
So the question is, have they bottomed here? Is this the bottom?
Tell you what, at the bottom, I think the problem may be the analysts getting ahead of the China slowdown and just worried about that. So there could be an opportunity. So yeah, this would be an interesting opportunity because estimates have already been bludgeoned.
That's right. That's right. So, given that Micron is cyclical and eventually this will bottom and go back up and potentially go up to this level, this seems like a good place for at least a long-term investor to pick up the stock.
Okay, that's cool. That's a cool little feature.
And so once you have once you have this template, what's cool is you could go to your dashboard. So here I'm going to pull up my dashboard. So these are the dashboards I follow. How is watch list, and this is your portfolio, and I'll put the link for this portfolio in the video description when I.
Yeah, so if people want to just see what I own, and if they're copying if they're following my portfolio, they'll see when I make changes too.
That's right. It'll be automatic. So for anyone,
I come back to this once a week and just update it. But
yeah, so for anyone kind of like for anyone clicking on the link, once you click on the link, you'll have this my portfolio loaded. And you'll just have to click follow. That's the way you follow Howard's portfolio. And after you do that, it'll show up right here. It'll show up in this menu, and it'll be part of your follow portfolios, which then you can just see. And anytime Howard removes or adds a stock, this will automatically be updated for whatever changes made. So what's cool about here? So we have the news here. What's cool about this now is that you can now load your template in here, right? So here we have our EPS estimates. And now I could just cycle through my stocks. I could like click on Amazon and then I could just hit, just do here, 5-year.
You can just kind of see how the stock's trending.
You could just go through the list here and see how the stock's trading. So this, I don't know if Tencent has, this Sejuro, how do you pronounce that?
Looking over the shoulder and helping people, and you can kind of chime in and help someone manage their portfolio as well.
So this is a good way to, once you figure out what template you like, whether it's estimate-based or technicals-based or valuation-based, this is a good way to just kind of like go through your stocks, flip through your stocks and see what's going on and what's happening in the different trends in the market.
Yep. And so those are the key features, right?
That's it. Yeah, that's it. So we basically unified the graphing, made these templates available, which you're able to save now in your personal drive. And it'll be much easier for us going forward to then plug in more and more data because we've really improved on our graphing functionality. So it's kind of easier for us to plug in new data going forward. And
how big's the team now?
Team is still a dozen. We just hired one engineer in New York, our first kind of engineer hire in New York. We're looking to hire 2 to 3 more engineers in New York. So if you're someone you know is developer,
gotta love finance, gotta love markets,
gotta love finance, gotta love markets, gotta love building cool things. And then we're also looking for a marketing person in New York who's gonna help us reach our audience, but also help us create content. So a marketing person who's content focused.
And what do you think of the markets here? And with that, let's pull up the S&P here. What do we think?
Yeah, so
and you're a closet analyst, so let's go through this quickly to end it.
Look, I think I'm more bullish than bearish, and the reason I'm more bullish than bearish is because I think there's a good chance we have a recession, but the size, the recession is going to be very shallow. I think we're going to be down 0.5% on GDP or whatever it is, and I think the market is already pricing that in, right? So over since 2018, we've been flat, right? So we've kind of gone nowhere, and that's because economic growth has calmed down. So I think central banks are ready to ease. They are easing in many cases. So it's hard. It's difficult to see kind of the big liquidity crunch that we had in 2007, 2008.
Question is it become the supply thing versus the demand thing this time? So I don't know. I'm kind of leaning with you. I mean,
that's a big reason why growth has outperformed value for the past 10 years.
I think we're also misunderstanding. it's everything you said. I think there's pockets of great growth, but you can't. Law of large numbers means we're growing, especially in a world where the populace moving and back to like putting up walls and looking internally, growth has to slow. It's impossible. Like hello, like if you're going to ask for a recession, that's how you get one. Now, does that slow down software? No. I mean, if I look at Roku or I look at, a lot of these software stocks are at all-time highs and going up, Shopify, despite that. So you have pockets of places that are in recessions, and you have slower growth for sure, especially with all the rhetoric going on. But man, like the money has flown into safe havens, and at some point, safe havens don't return capital.
Yep.
Return you, they can't. They're safe havens. They're not supposed to earn you 10% a year. Safe havens aren't supposed to do that. So at some point, there's just a ton of money waiting to flow back into risky assets. But it's just. I've never seen anything like it. But I always say that, and that's what makes the markets amazing. It's hard for me to grasp at 28, 2,900 that we're in a recession, or going to have a short recession. But like you said, 18 months of relative sideways action with a kind of two crashes thrown in, or mini crashes thrown in the last 2 years, or deep shocks. The government shut down, and now you have the trade wars. Pretty interesting. Markets have been pretty resilient. I think.
Yeah.
That's kind of.
Look, I think like looking at, I know the banks are like structurally screwed, but looking at like, Bank of America, which is a 2 trillion asset company, which is 10 times leveraged as a bet on the economy, or as a way to think about the economy. So let's just look at it how, estimates were flat for a long time. They came up and, they went flat, but, this is not a,
Either their earnings are going to be misunderstood and come down sharply, or the stock could ricochet here.
Yeah, and you can see here the market, even though estimates have been coming up here, the stock has been sort of flat. So not that Bank of America is a great structural long or anything like that, but I think I sort of agree with the stock is what Bank of America doing and reflecting on the U.S. economy, which is things have been growing. They've been growing slowly. You probably have to discount that for some uncertainty that's going to happen, but I don't see the famous last words, but I don't see the big unwinds that we had in the last recession kind of here. We just don't have the same.
It feels like a lot of headline risk and rhetoric. Everybody wants the markets higher. I think people have enough taste of wealth that people will come to their senses. The question is, when everybody wants the markets to go up, will they go up? And right now it's climbing a nice ball of worry, and if you own the right stocks, things are working. So it's an interesting moment. I'm with you. I'm leaning more bullish than bearish, but I still feel like the stock market is a little bit jittery here. So you might as well wait to see kind of a resolution.
Yeah, and I think on a technical level, which I'm sure like any technical analyst will kind of tell you, it's right now we're trading sideways, and that's the best that we can sort of say.
I'm cool with that. Marking time after great runs that like these companies have had. I'm totally cool with being patient.
Yeah.
People in their 20s should be thrilled by seeing this stuff for 18 months. Really trying to learn the market and figure out who the next leaders are going to be, and learn how to analyze it. There's so many, like you said, like Koyfin, so unbelievably, as a free product. There's so many ways for kids who have bought their first stocks to kind of really dig in and learn how to do this. But I think there's something around education on this platform, whether it's daily seminars or whatever, which, building a community and having people use this product would help.
Yeah. So we should do more of these webinars. This is, now that I'm looking, this is definitely here, this is a short-term bearish pattern here, kind of like big decline, consolidation, probably break down here.
Yeah, and seasonally, I just am skeptical. So again, everybody knows the seasonality here, but it doesn't mean, I still feel like the markets want to shake some people out, but at the same, wouldn't be a surprise to see us at 3,300 at the end of the year. So I'm kind of playing it close to the vest. if you looked at my portfolio, at maximum positions, I just don't own a lot of each position. I've been kind of playing it low. So there's enough leadership that there's a lot of stocks to choose from.
Yeah.
It's just I'm a little bit concerned with the volatility here, but I'm not scared out of the market by any means. There's enough good leadership, and there's so many great companies. Like China's so beat up that Tencent and Alibaba are interesting to me. In the scale of what Amazon's going to be and what Google is, Tencent and Facebook, Tencent and Alibaba are just massive.
Right.
And they're going to own.
With implicit government backing.
With implicit government backing, a digital wall. All right, buddy. Have a great night. Congrats on the launch, and we'll talk to you soon.
Cool. Thanks, Howard. This was great. Talk to you soon.